We now have confirmation that over half of global stocks are in a bear market, but don't worry, the Fed will rescue us. Janet Yellen has now changed her mind about the impossibility of a financial crisis and is now officially worried about what will happen. The economy is looking weaker and weaker globally, and this can only be corrected by removing the measures the central banks took and allowing the crisis to fully unfold. Until that day comes, we will continue into madness. You came here for the truth, so let me unveil that for you. Today, we are going to look at the stock market. I want to show you economic indicators. I want to show you Janet Yellen. I want to give you an idea of what's happening right now. So let's begin by taking a look at the markets. Here you can see that the Dow Jones, as I record this in the middle of the day on Tuesday's trading session, is down 126 points. It started the day up high. It is now down low, but certainly this could reverse and go into positive territory before the end of the trading day. I'm talking about the situation that's happening right now. You're seeing the escalations between China and the US. You're seeing what's happening with Huawei company and the CFO. You're looking at the Federal Reserve. And there are all sorts of different reasons why the market is up and down within a period of time. I mean, we look at it on a daily basis, it's going crazy. Not even on a weekly or monthly situation. You can see how this has spread globally. So I'll give you the chart, which you came to see, and that is this. Percentage of MSCI world stocks and market cap now 20% down or more. Looking at this chart, it tells us that there are 52% of world stocks now in a bear market. That should be worrisome to everyone. Think about the prospects here. You're looking at a market globally, 50% of them are down into this level where they may not come back from for a long period of time. We need major changes in order to backstop the losses that have occurred. And it's all going on globally today on such a wide scale that we have not seen this activity since the financial crisis. This right here should be worrisome to any individuals who are paying attention, who are actually actively seeking out information. Anytime I see individuals saying, the stock market is going up, what are you talking about? I'm going to point to this chart. It shows us the reality, and we need to pay attention for goodness sake. The S&P 500 is still down more than 11% from its September high. The easing of anxiety in markets was paralleled by a view that the Fed might be easier on its approach to interest rate policy. Optimism around trade talks boosted on Tuesday. Hey, no need to worry because the Federal Reserve is going to be nice to us and the trade issues are going to be resolved. Why? Because we saw a tweet that came out that said, don't worry, we're taking care of it. My goodness. How silly these algorithms that trade these systems really are. They can be so easily fooled, and that's very worrisome for what's going to happen in the near future as you see the market start to fall. Who knows what type of information they're going to be trading on, and they're going to set off triggers all the way down, and the markets will have to be shut down in order for them to start figuring out what the hell just happened. The country's budget deficit in the first 2 months of fiscal 2019, which began on October 1st, was 50% higher than in the same period the previous year. We are talking about massive deficits that are being incurred today in the United States, but this is really going on all over the world. You don't need to worry about this, apparently, because everything is just fine. Well, it always comes back to haunt a country historically, having massive deficits, having too much debt, having central bank quantitative easing type policies, having very unrealistically low interest rates. Every time historically a country has done this, eventually it has bit them in the behind. So we'll see what happens this time around. Well, Paul Tudor Jones said he is feeling good about the markets in 2019 and willing to make a bullish bet on what? On what? Buybacks. That's right. Not because of the good sentiment, not because of production, manufacturing, jobs, positivity within the markets, not within the consumers. No, on buybacks. Now, nothing against this individual in particular. His job is to make money, and that's what he does. But look at it on an individual level. This is ridiculous. There isn't a real economy anymore. We have central bank quantitative easing, we have stock buybacks, we have all sorts of different methods that have been created by the government in TARP-type bailouts or other schemes that they've created, and there's no possible way that this can ever be fixed without letting it actually collapse. Let it collapse. Let these institutions fail. Let the panic spread, and it will be restored in such a short period of time. You can see that historically by looking at the depression of 1920. That's right, I said 1920, not 29. So check that out if you haven't heard about it already. I wrote about it in my first book on purpose. In this article here, it's talking about Janet Yellen. I want to find the exact portion of the quote where she says, "I think that things have improved, but then I think there are gigantic holes in the system. The tools that are available to deal with emerging problems are not great in the United States." She cited leverage loans as an area of concern. If we scroll down further, she talks about the current Fed leadership agreeing with this. And of course, we have a very big issue going on inside the Federal Reserve. They're not prepared for the next financial crisis. She said the regulations can only address such problems at individual banks, not throughout the financial system. If you go back into the pages of history just 1 year ago, Fed Yellen expects no new financial crisis in our lifetime. So it only took a year for this individual, everybody's favorite, Janet "Shake It" Yellen, to turn around in a 180-degree spin and start to all of a sudden be worried about what could occur. So that tells us right now that you can never take what these individuals say at face value. You need to know the truth behind it all. They're using their propaganda every single time. This article here is talking about the VIX index, something I talk about regularly and how manipulated it is. And we know that specifically because the Federal Reserve has admitted to engaging in a short position on the VIX index. This here out of the Wall Street Journal says that the measure is based on options prices on the S&P 500 and tends to rise when stocks fall. According to Credit Suisse, recent options prices on the S&P 500 indicate investors have been ramping up their expectations of volatility throughout 2019, a shift from recent months when they expected short bouts of turbulence to quickly dissipate. So now they're just expecting more turbulence throughout 2019, and that is shown specifically on the VIX index and the options that are there for the S&P 500. Foreign investors spurn U.S. Treasuries as curve threatens to invert. All I wanted to really mention was the fact that we are now seeing the yield inversions that have occurred, and it is important, not for me, not for you, not for your coworkers and family, but it's important as a recession indicator. It has predicted every single recession after 1950. So we're looking at this information here, we're judging it, we're able to deal with it, and we know what this could bring. The storm clouds of the next global financial crisis are gathering despite the world financial system being unprepared for the next downturn, the deputy head of the IMF has warned. Apparently, the IMF said the crisis prevention is incomplete more than a decade on from the last meltdown in the global financial system. As we have put it, fix the roof while the sun shines. But like many of you, I see storm clouds building and fear the work on crisis prevention is incomplete. They never fixed anything in the first place. They never addressed the issues. And here we are today, 2018, right at the end of the year. And of course, this will be something that we are going to regret. At the very bottom, we ought to be concerned about the potency of monetary policy. He said of the ability of the Fed and other central banks to cut interest rate to boost the economy in the event of another downturn. Think about it. They have no room to fall. They have to go into the negative next time around, and that, of course, will be absolutely disastrous. Look at what happened in Japan as an example. They're stuck. They're ruined forever, permanently. ECB's QE redemption estimates. This is the different programs terms of the ECB and the garbage that they have been putting out there into their own different countries. Looking at this, basically you have the APP, the PSPP, the CBPP3, the ABSPP, and the CSPP. That's a lot of alphabet right there. And unfortunately, none of it is good. All of this is a bunch of garbage piled up, and the ECB trying to monetize all of it in order to save Europe from collapsing. Hasn't really worked because the situation right now is looking worse and worse every single day. So that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these 2 books have it all. You can flip through them for yourself at Amazon. There's a link in the description if you want to check that out. I also have the audiobook available at themoneygps.com.